Hi, good day. Today I'm going to discuss about the chapter 21 limited companies. So this topic is talk about the public limited company and the company listed in which is the company listed in the stock exchange, or the pirate limited company, which is share for the families or the friends. So I'm going to discuss in detail for the continue slide. Okay, our contents to discuss is about the nature of the limited company and what type of the limited company, which is I mentioned just now, the public limited or the private limited. Private limited in Malaysia, we call it Sendirian Berhad. And then from the point of view of the individual, if they as a shareholder, what is the benefit and what is the things that they need to take care. And from the point of view of the business, so what are the things they need to consider when they form a public limited company or the private limited company, and the share capitals, what type of share capital they have, and how they arrange their share capital. And 21.2 is the ways to raise fund in the limited company. There are three ways to raise fund. Either they could issue a preference share. Preference share have redeemable and non-redeemable preference share, and the ordinary share, which is the issue to the public and increase their capital when the public invests or buying their share. Okay, debenture is the nature as same as the loan, but this debenture is the taking loan from the public. So there is a term and condition, and when there is maturity, they have to pay back the principal amount and the interest they promised. We call it debenture interest to the debenture holder. And also we cover the income statement of the limited company. Like example, the rest of the item that you will see in a sole trader income statement are the same in my limited company here, except there is a finance cost. Finance cost, previously we talked about bank loan interest, right? But here the finance cost is expenses actually. Here we included the debenture interest, which we need to pay to the debenture holder once their maturity, and the dividends on the redeemable preference share. Redeemable preference share is buyback from the company by the company when they issue this preference share. A redeemable preference share is similar to the debenture. And we also cover statement of changes in equity, which is the most important part that we need to discuss. So I will introduce you the template and how it show and how it's doing to prepare the SOCI. We call it SOCI. And then how they transfer to the SOFP under the capital section, because limited company do not have capital, but instead of writing as capitals, we write up the details from the SOCI. Okay, so that's the part I'm going to discuss further. Okay, introduction. What is a limited company? Limited company is a legal entity which has separate identity from its shareholder and liability for the for the company's debt limited. So means that you are limited in your debts uh, within the companies, but do not take up your personal income or asset to cover the company's debt. Okay, and the shareholder also limited their liability, as in how much they contribute. Okay, so the how much they agreed to contribute. Okay, the nature of a limited company. So you can start with the one person, or there is no maximum numbers of member. Therefore, you will see the shareholder from Genting Highlands Holding Company. Holding company is the public limited company, which is they're allowed to issue the share and then get the funds from the public. So there is a lot of people who could buy their share. So there is no maximum numbers of the shareholder members. Member here means a shareholder. The capitals of companies. All right. So the capital of the company is divided into units. We call it share. We do not call it as a capital, but instead of calling capital, but we call it as a share. and this is it can be any monetary amounts. Okay, so the members, which is shareholders of the companies, are only liable for the debts of the company up to the amount they agree to pay. So let's say I invest 100 share. So if I lost, that means I lost this 100 share. I won't lose other things and cover the debts by the shareholder. No, it won't be happens. So the share of the company have a face value, which another name we call it par value, such as $5 per share, $1 per share, 50 cents per share, that you can see from the any online exchange stock that does. Okay, so all their companies website. Okay, profit are distributed among the members in the form of dividends. So when there is a profit for the year, the company could either keep it as a retained profit or issue from the retained profit as a share dividend to award to reward the shareholder. So because they are using their shareholders money to invest in some of the project, and now they got the profit and share it over with the um, among the shareholders. Okay, but there is certain stated in the terms, certain percentage from the par value of the share that shareholder purchase. So they will have fixed not fixed some percentage allowed. Okay, the companies may pay out a dividend more than once a year. Therefore, dividend can be paid in a halfway. Let's say they promise to pay you 1,000 as a dividend, but they could issue half a year, like January they issue 500, and December they and June they issue another 500. So the halfway payment we call it interim dividend, and the final year one we call it as a final dividend. So total is 1,500 for interim, 500 for final dividends. Okay, we will continue discuss about this in the class, and how to calculate what is the amount of the payable and what is the amount per share, and calculate the total capitals. So I will discuss in the class. There are two types of